Good morning, TGIF. Thank God it's Friday. It hasn't been too bad a week. We had a very frantic um, robot activity on Monday, Tuesday. It was almost like it was in a frenzy, and it looked like the crowd were very undecided and panicky. And the robot triggered lots of trades back and forth. So the robot, what it's doing, it's examining the failure rate. So if the herd are getting paid, it won't open any trades. If that's below 50%, then it simply won't open any trades. We have to have it so the crowd are getting punished, right? Because that would be normal, right? And if we're below 50%, they're getting paid, and that would be unusual, okay? So we don't want to be trading the sentiment if they're getting paid. We need to be entering when they're getting punished, right? So that's the logic there. And so ideally we'd like it a bit higher, but at the moment we've got 50%, and so that means that we've triggered Aussie Kiwi because of the shifting there, and it's trying to detect a retracement on that particular currency pair. And we've got flags now. We had a column to say whether or not that it's misbehaving, but I need to work on that formula. All right, so we'll probably have an additional column to say, see, really that would be naughty because that should be positive, right? That's being naughty. That's okay because it's got a good score. We're positive, naughty, and all of these. So this is why we've got a poor failure rate. So what should happen is that we've got green percentage change up here, red percentage change down here. So this almost looks like a payday Friday. I mean, the Euro Swiss, it should be falling. We had a decrease on the score change, the herd along. So really that's probably okay being negative, but lots of green down here, lots of red up there. So that's why we've got a poor failure rate. So whether or not this is going to be a reversal, which is likely, or they're going to get paid, and that would be unusual. So we have to be patient. The robot is now being patient, and it's going to be waiting for them to be getting punished. So we were probably around 20%, 30% over Asia. And then over as we go through to London, New York, this increases and it squeezes the retail guys. And that's like a normal thing that happens on a daily basis, okay? And so it's going to increase over time and it's going to squeeze them, right? So we should be seeing green up here, we should be seeing red down here, and that's that. So that's the robot logic. Dashboard is that we're going to have some metrics on the indices and VIX and the dollar. We're going to feed that into this calculation, which is going to be really cool. But this is static. This is like a manual thing that I do every day based on the sentiment, speculative sentiment index. All right, so that's a static thing. Once I've done it, it's just left until the following day. But we're going to have a cell down here. It's going to be a dynamic value, and it's going to tell us how the indices are performing. And so what should happen is that if we're green here, telling us that the herd are caught the trap short, we should be positive on risk. So the Russell 2000, the small caps, over the last 5 days, got 3%. Bullish, 1.2% on the Dow Jones, 1.1%. So because they're positive over the last 5 days, it's going to give it a good score. All right, so that's the key. And that should help us like carve a bias, because we've got the sentiment to help us, but we've got the technicals that should just reaffirm what we're seeing here. And they shorted out over the last 24 hours. I'll show you the indices now, and I'll show you DAX. So remember, they're selling it, right? And they're short, but they're selling that over time. And this is them selling that over time, so we can create a box. And this level here is of note. Here, right, we had a harmonic. You can see that M, that's the body of the harmonic. And it just happened to coincide multiple respects. And we've got another respect here as well. So keep an eye on that 15922 for DAX, okay? And it was a buy, but they've sold it. So it's made them worse for themselves. So it's possibly going to pump, but keep an eye on that 15922. And And also we have to remember the weightings of the calculation. Like the UK 100 would have like one score, but the S&P 500 would be at least 5 times the size of the weighting as opposed to the UK 100 on about the risk calculation. So really what the S&P does has so much more emphasis than something like the France or UK. So they're going to have to be weighted accordingly, and that's what I'm going to be doing on the weekend. So that's done DAX. Let's look at S&P. And see, you know, they sold it, and we can create another box here. And yeah, we had a good day yesterday in the robot. We had 11 out of 11 trades went successful, and so that's cool. And we needed that dollar strength, and we did see it, so that's good. That was reassuring, and we needed the herd to get punished, and they were getting paid so long yesterday. It was quite annoying, and inevitably they did get crushed, which is something we should be seeing today. But yeah, likewise, you know, buy. They sold it. 1, 2, 3. Up we come. And then US 30. And you know, we had a channel break. Don't forget. So they sold it. Well, they sold it here sideways again. Number 2. This is horrible chop, and they sold it again. And that's the last time they'd sold it, and we possibly might be making a crossover, but it looks like it's possibly not. They're going to sell it, so they'll probably sell this this wick, this candle here. If they do, then it's just going to do this, right? So I'm not too surprised with risk on, because we just have to look at our risk calculation. They heard our core, aren't they? Now for gold, I think what we'll do, we'll look at this next week, because we can see we're trending lower. If we do get a buy opportunity, it would be going a little bit against the technicals, and ideally we want it to at least stabilize a little bit first. You know, perhaps this might be like some kind of inverted head and shoulders going on here, where it might be indicating the bottom. We don't want them to be buying here, and they have done. So we are a seller at the big picture. They're starting to go long, so it might invalidate this inverted head and shoulders. Perhaps they saw that and I thought that might be quite bullish. So what I'm going to suggest next week is that we wait for this to stabilize before we're looking for buys, and ideally we get the setup here as well on the trading station. So just the one trade today. It's the Aussie Kiwi, and this is something I'm going to be doing on the weekend, and I'll show you what I mean. There we go. See, the New York Stock Exchange is like a monster compared to the London Stock Exchange, for example. So we'd have to do the weighting accordingly for the Dow Jones. That score has to be a hell of a lot larger than the UK 100 score. So I'm thinking possibly 5 times greater, but I need to be studying these stats there. So you note that we've got some error, so that's a bit of maybe an issue. I'm not sure why that would have errored, but I can put an error thing in there. So if it does error, we just it won't be a problem. And then we'll have some real-time calculation on our dashboard, and it will come down here. So that will be static, and there'll be a dynamic here, and then that cell here, this new cell, will be reflected on our QDB scores, because this is what I'm looking at all day, and it's really good for trade setups as well. So we're currently seeing a lot of naughtiness up here and a lot of naughtiness down there as well, and see we're going back below. So if we go below 50%, the robot will just pause and it won't do any more trades. So remember, I'm away pretty much all afternoon, but if you need me, let me know and I'll get back to you as soon as I can. I'll speak to you soon.